Welcome to another White Coat Investor webinar. We're talking about everybody's favorite subject today, taxes, particularly tax reduction. And I'm here with Alexis Gallati, founder and lead tax strategist at Cerebral Tax Advisors. Alexis, thanks for being with us today.
Thanks, Jim. It's great to be here. I appreciate seeing you again.
So this is our most requested service, right? All docs are like, I pay too much in taxes. I want to lower my taxes. I talked to somebody in the doctor's lounge and he's doing this. Should I be doing this? It is something that seems like everybody wants. How did you end up deciding to focus Cerebral on physicians and medical professionals?
Yeah. So, of course, with taxes, everybody has to pay taxes. Unfortunately, it's unavoidable. And I've been in the tax industry for over 20 years. And when I noticed during my husband's residency that 4 months of his salary was going towards taxes, I was like, and we were about a year and a half out from him finishing his residency. And so I was like, oh my gosh, like I could see the writing on the wall. And so, I had worked at that point in local and regional CPA firms for 12, 13 years. And I was like, okay, why are the Warren Buffetts and the Bill Gates of the world, getting this 0%, 10%, 15% bracket, tax bracket, and how can I do that? So that's when, after having my second child, I started my own practice. I started Cerebral. My husband is a private practice neurosurgeon, and my dad's a retired private practice neurologist, hence Cerebral. And I really wanted to focus on having a place for physicians to come and other medical professionals to come and have a safe place to ask questions, be able to get real comprehensive service. So that's what Cerebral is. It's a boutique tax and accounting firm that specializes in medical professionals all over the US, offering tax, accounting, consulting, and advisory. We really focus, though, on court-tested, IRS-approved strategies that have that proactive planning, superior client experience, and excellent communication. So, our services are really comprehensive to just take as much possible off the plate of our clients, and again, to really focus on the tax planning, because that's where you're really able to move the needle. Essentially, tax planning guarantees tax savings if you set things up properly.
Yeah. Now, there's lots of accounting firms out there. There's lots of tax firms out there. Most of them focus primarily on tax preparation, though. How's Cerebral Tax Advisors genuinely different? What is the philosophy really that sets you apart?
Yeah, so our philosophy is centered around what's best for our clients. We're proactive. We have unconflicted partner focus on freeing up your tax dollars. It's not just about processing tax returns, and really, that's kind of going to the wayside, especially with AI. We really want to be guiding our clients through a strategic process of building wealth with confidence and clarity. And so, the way that we're really different is through our white glove service. And what that means is that, we are focused on medical professionals, and really around that implementation and support. So, there's a lot of advisors out there that, yes, they'll do your tax return, but they don't understand the different tax strategies that are out there. And really, more importantly, how to implement those strategies properly. And so we provide a ton of guidance around how to execute these plans. We're doing that on behalf of our clients, and, making sure too that our clients have a dedicated point person that is, senior level or above in the firm, that works with them to, be their financial quarterback. They're limited to about 30 to 40 clients each, and that's by design. So then that way they really can focus on that white glove, and be a direct relationship with our clients. And we're really also focus a ton on education and empowerment. So we dedicate a lot of our consultative time to educate our clients. All the strategies we use are court tested, IRS approved. We don't put anything on a tax return we don't feel comfortable defending in an audit. And so our clients really, we want to make sure that they understand the strategies and the recommendations and know that these strategies are backed up by court cases and IRC code, so that they can, not only, understand the legal basis, but have an ongoing role as, financial steward of their plans. And we facilitate this through having Cerebral Wealth Academy. So it's an education platform that is primarily an additional resource for our clients, that has different templates and resources and videos, and we do webinars and et cetera to just enhance our clients' education and understanding. And allows us to better communicate. And we're also very big on risk mitigation. So I have a 3-year fellowship in IRS representation. And so obviously I'm very focused on reducing tax, but I want to make sure that everything is done properly, that the documentation is in order. Because if you've ever had to go in front of the IRS or deal with an audit or even just a correspondence notice, if you don't have your ducks in a row, you're not going to prevail with them. And of course, we're very focused on those proactive tax strategies and that clear communication. Most tax advisors are reactive, and we are very proactive. So I've built Cerebral around, obviously not only that planning, but that continued planning. So with our most popular package that we offer, there's 2 times a year where we're updating your tax plan for changes in your situation, changes in tax law, and we're looking at prior years to see what else we can do. But that custom blueprint that we do, that tax plan, is a personalized plan that outlines that each strategy, the authoritative backup, and clear implementation timeline. And this plan's typically range to being about 60 to 100 pages long. So I'm very much give more information than hold back. And of course, the amazing communication we have with our clients is paramount. That's a very big top priority for us. We don't want our clients to hesitate whatsoever when it comes to connecting with us, because we are not going to hesitate to contact with them. I always joke that you're going to hear from us a lot more than we hear from you, whether it's reminders or like if there's changes in the tax code or things like that. We want to get in front of our clients as soon as possible to let them know what's going on. And probably one of the biggest things that differentiates us is that we don't take any commissions or kickbacks on any strategies we recommend or vendors we recommend. We don't sell any products. The only compensation that we receive is just our transparent fees for our expert and strategic advice. All of our advice is product agnostic. We really focus on optimal structure and strategy for their tax situation. And it's not about pushing a sale. And then, a lot of our referrals are based, actually all of our referrals are based on that merit. Like if we have a referral that we've worked with, even if it's for years, and they're not treating our clients right, we don't recommend them anymore. And that's because we want to make sure that, with our white glove service, that our referrals give that white glove service as well. So basically our recommendations are based solely on tax law, cash flow analysis, and our client's stated goals.
You're describing something that is very different from what most people experience with their tax person, right? Most people, hey, here's the stuff I got from the IRS and my employer and all this stuff, and they put it on your desk and you pump out taxes and here's a tax form, sign them, send in this and this, and you're good. This is more of an advisory relationship. You're essentially functioning as a tax strategist more than tax preparer, correct?
Correct. Yes. Everything is very much around that tax planning. Of course, we do the tax preparation, we do bookkeeping, we do consulting, we do all the normal full service services, but it doesn't make sense for us to work together if we're just doing a tax return. Because I'm going to look at things and that tax return, I'm going to say, oh, you could be doing this, this, and this. And I won't be able to help myself but not give you advice to help lower your tax situation, or even just to organize it in a way that's more efficient and less of a burden off of your plate.
Yeah. So everybody wants this. They want it from their tax guy that's doing their tax returns. And they want it for $200 a year. That's the problem, right?
I wish I could.
Yeah, it just doesn't pencil out. So give us some sense. What does it cost to have this sort of tax advisor, this tax strategist? And why does it cost more than some people pay even for financial planning and asset management?
Yeah, so it really depends on what you're looking for. It's interesting. I actually read an article that you put out on October 6th. What would your ideal financial advisor firm look like? And, to quote that article, that it says that most new investors have no idea what the going rate is. I'm kind of paraphrasing a little. These days, the answer for most WCIRs is typically between $7,500 to $15,000 a year for a full service advisor. And you know where I get the answer from? You've been referring white coat investors to good people in the industry for the last 15 years. So, while that one article actually kind of shows you that for that 7,500 to 15,000 for a good financial planner, that's typically what a tax plan design should really cost you. And that's a one-time service. That tax plan design, you're, again, looking for that expertise, and you're going and wanting somebody to usher you and guide you through what will work for your particular situation. So yeah, it really depends on what you're purchasing. If you're just wanting a one-time tax plan, then our fees are in line with what a financial plan or a financial advisor would be charging for their financial advisory services. But if you're needing more than that, you're wanting to have the comprehensive services like tax preparation or bookkeeping, then of course that has a lot more hours and manpower and expertise that are needed. And so that obviously costs more. So like our tax plan designs start at $10,000 and increase with complexity. On average, it usually ranges somewhere between $10,000 and $15,000. And that's one time. And we do provide a 2X guarantee, which we can talk about in a moment. But this includes a customized written plan with our recommendations, calculations, the authoritative backup, and as I mentioned before, is typically 60 to 100 plus pages. And so this really guides you in knowing what works for your situation, because a lot like medication, if you have medication A and medication B, those drugs might not work well together, and it's very similar for tax strategies as well. Now, our maintenance packages, monthly bookkeeping, CFO services, etc. You can go to our website. It's cerebraltaxadvisors.com/pricing. And all of our starting prices are right on there. And we have 3 tiers that depend upon your situation. We have an investor package, which is just for those that don't have a business tax filing and don't need comprehensive bookkeeping services. And then we have a business package, which are for those that have a business. And then we have a VIP package for those that need a lot more hand-holding. And so all of our packages include annual tax preparation, whether it's for your personal return in your business. But if you're in that business package, it includes a twice a year proactive planning, continued proactive planning of the mid-year projection, year-end projection. We do quarterly bookkeeping. We also provide audit protection. So we back up all of our work. If you were to receive a notice for anything that we prepare, you send it to us and we help you take care of it. And we also don't charge extra for additional questions, meetings, emails. Again, communication is a top priority for us. We want to make sure that you don't hesitate whatsoever to connect with us, and that you don't that we're not going to hesitate to connect with you for any information that we want to get to you.
Yeah. All right. Well, I mean, a bunch of people just had some sticker shock, right? They're like, oh, it costs that much. So I think maybe the next topic to discuss is who should and who should not hire you. Who's going to find more value than that $10,000 plus a year out of the service? I mean, I get a bunch of people, they come out of residency and they get their first job. They're an employee, they got a W 2. There's very little else interesting in their financial life, but they're shocked that they now owe more in taxes than they used to make as a resident. And they want to figure out a way to not pay that much in taxes. Maybe that's not the person that would benefit much from a tax strategist, though. So, who should really be thinking about this, and where do people find enough value there to justify the cost?
Yeah, it's definitely can be a sticker shock depending upon your situation. The one thing I do want to mention is that unlike a financial advisor, our fees are tax deductible. So we want to go and, especially if you have a business, try to move as much of our financial, or excuse me, our fees through that business. So you get a little deduction of it, which is always nice. So those that are best for our services. And we are not everybody is a good fit for us. And really, we want to work with those that make over $400,000 of taxable income. And ideally, someone that has at least $50,000 of revenue as an independent contractor. So coming from a business, or maybe they're doing locum work, expert witness work, etc. We do work with those that don't have $50,000 of that 1099 income. Like we have a lot of clients that are investing in real estate or have other investment activities, and so those would, like I said before, would be really great for that investor package. But if you have that, at least that $400,000 a year in taxable income, if you also have changes in income fluctuations, if you're like my husband, who his practice, like his income just goes up and down depending upon collections and et cetera. So that can be very stressful for a lot of physicians. And then also too, if you have other income streams or investment activities, this is definitely an area where you would want to work with a tax advisor, because each of those income streams can be taxed differently, and different strategies can go against the different types of income and the way that they're taxed. That makes sense. Really, those that want pure unconflicted expertise is also extremely important for those that want to work with us. We really want to work with those that want a trusted advisor. We know that doctors get sold things that they don't need. Unfortunately, this has happened to Chris and I. And so we don't, since we don't take commissions, we don't sell products, we really want to have you walk away with the why behind every recommendation. And, for clients who want to get the most value from us are the ones that have that level that want that level of transparency. We also intentionally keep our client list small to ensure we can deliver a real high level of customer service and communication. And so that's why only a small percentage actually qualify to work with Cerebral. And making this cut really allows us to concentrate on that white glove experience, and for us to specialize in medical professionals. So really, those that would not be a good fit to work with us are do-it-yourselfers. If you prefer to do your own bookkeeping, payroll, record keeping, like to use their softwares, then we really wouldn't be a good fit. And like you just kind of discussed, Jim, price sensitive taxpayers, if they really view tax and accounting as a commodity service, and they're really just shopping for lowest price, we are definitely not going to be the right fit. They will see more value add component of our superior client service and education as an unnecessary expense. And then really, if their situation is stagnant, they don't have changes. As I mentioned before, those that would work well with us are those that have income fluctuations or different income streams, et cetera. If they're just content with the status quo, they're just a W-2, by all means, TurboTax is going to be, fine for them. And, they might only need to work with somebody just once a year, once a year or, every few years to get a tax plan, all together. And, those who really like to rely on ChatGPT, as authoritative source. And unfortunately, just to warn everybody, ChatGPT likes to make things up sometimes. So always ask for their sources if you are going that route.
Yeah. Now, also when we talk about fees of this level, a 5-figure annual fee, people start going, well, do I get financial planning for that too? Do I get asset management? Do I have to hire a financial planner as well? Can you talk a little bit about that? Whether financial planners offer this service, what people should do first, et cetera, how you interact with their planner, et cetera.
Yeah, so we do not provide any investment advice. So we can't say, hey, go buy Coca-Cola versus Pepsi. And we don't provide asset management and at this time. And so this is really centered around that tax planning and the tax preparation, everything around the tax. Now, I've obviously been around and long enough where I'm still giving advice around those areas. However, if there's something out of my wheelhouse, like, hey, you know what, you might need to think about a trust or get something in your will, or think about this sort of investment in terms of the tax efficiency. I am going to say, go check with your attorney on this. And that's just because I'm not an attorney. But when it comes to financial planners, they might do a little bit of tax strategy with you, but they don't have the expertise and that deeper background in tax. And a lot of the institutions that they work for actually prohibit their planners from giving specific tax advice. And this is why a lot of our referrals actually come from financial planners. Also too, it's important to know that CPAs, EAs, and tax attorneys are really the only ones legally authorized to represent you in front of the IRS. So a lot of financial advisors, they'll do a lot of financial planning around other aspects, but they aren't giving you advice around, or deeper advice, I should say, around the tax planning.
Yeah. So it's really a separate service. I mean, clearly there's a little bit of overlap when you're talking about
Yes.
your finances, but it's a separate service. So what do you think first? I mean, you're a little biased on this, obviously, but what should people do first if they're going to hire both these things? Should they hire a tax advisor first or a financial planner first?
Yeah. Well, yes, I am a little biased. I think tax planning should definitely come first, because taxes are usually the single biggest expense for pretty much everybody in my field, but definitely physicians and other medical professionals. But really, again, tax planning guarantees results. A financial advisor can put money into the market or in other investments, and there's not a guarantee. But if you're able to hire your kids or choose the correct entity structure, then that is definitely going to save you tax. And then tax planning also dictates the efficiency of investments, asset location, where they should be, and retirement optimization, things like that. So, and those are things that you can then bring to your financial planner, that tax savings, knowing where you want to have, your money invested into for tax efficiency, et cetera. That would kind of be that next step. If they don't have that already, then you're just gonna have to go back to them once you have that tax done. But it's just tax planning in general just really maximizes your return on investment and your cash flow.
Yeah. So give us a sense for what this looks like for a typical client. Here's a doc with some self-employment income or maybe, a few real estate investments or whatever. And they go, I could really use some help with, tax strategizing. And they come in. What sort of techniques do you typically talk to them about? What mistakes do you see them making that you correct? What's kind of give us a sense of what that looks like for a typical person? I mean, obviously everybody's a little different, but hypothetical example.
Yeah. So the majority of our clients have a business, so they're in that business package. And so the typical client will come in, they'll sometimes have some W-2, and then they'll have that 1099 income, or they'll be 100% 1099, doing locum work, etc. So we focus a lot first on basics. And those are, it also, like I said, it depends on where they are in their journey. But we'll start with those basics and things like entity structure, retirement, the deductions and credits. So what personal expenses do they currently have that can be legal business deductions through their business? Going and looking at, they have real estate. Okay, do they qualify for real estate professional status? Do they have short-term rentals? Are they doing cost segs? So, and then we'll look at investment strategies that have tax benefits as well, things like oil and gas or solar credits. It really just depends on what their goals are, what their risk tolerance is, and what they're currently not doing. The way that I calculate how much I can save you each year is based off of saying, hey, if you were to continue doing what you're doing as you're doing it, this is how much tax you'd pay. But if you were to implement the strategies I recommend, this is your new tax, and that difference is the tax savings. And so I'm not taking credit for things that you're already doing. I'm going and introducing new strategies that will actually move the needle. And if you're like, hey, Alexis, I have zero interest in real estate, no problem. Totally get it. That's like a second job. So if you're not interested in that, I'm not including that in your tax plan. So these really have to be things that, again, will move the needle, will make sure that you, and it's working towards your goals. So again, that's why too, even though we have investment strategies that have tax benefits, if it's something you're not interested in, like I don't base any of our tax, our tax savings or even our guarantee around that, those investment strategies that have tax benefits.
Yeah. Yeah. And it's an important point you make, right? Everybody thinks they just need a different tax person and they just got to file their taxes differently. But that's not really where the savings are. The savings are in living your financial life differently. And you're showing them some ways they could live their financial life differently, correct?
Yeah.
Okay. Well, you mentioned the guarantee a couple of times. Explain exactly what your firm is guaranteeing.
Yeah. So I don't want to work with somebody unless I know I can save them more than what they're paying us. Otherwise, it doesn't make sense. They should go look for someone less expensive. So the design of our plans have that what's called a 2x guarantee. So as I mentioned before, plans start at $10,000 and increase with complexity. So if it was $10,000, I guarantee a minimum of $20,000 per year in tax savings, or you get that plan for free. But on average, over the past 10 plus years that I've had Cerebral, our clients on average have achieved over 453% return on investment with the design of our plans. And that just goes to show that I charge based off of complexity and not a percentage of how much I can save you. It's really, it's really important to me that we focus on that return on investment and that our clients see that, hey, you know what? If this doesn't work out, I know I'm going to get my money back. And I've never had to pay back out. And that's because, like I said, I've been doing this for so long. I know that if somebody has a certain taxable income, which is why we do have that criteria, and if they're not doing XYZ, then I know how much I can end up saving them. Now, there have definitely been times I've spoken with potential clients and I've said, hey, look, you're doing a great job. I'm not going to be able to move the needle for you and we're not going to be a good fit. But if they're not quite there yet with their situation, I'll say, hey, you know what? Come back to us in 6 months. Or if yes, I'm going to be having that $50,000, $60,000 of 1099 income in 6 months, then let's talk then, because I really want to make sure that we're able to save you quite a bit more than what you're paying us.
All right. Well, let's move on to some of the techniques you're using. I mean, it depends on who you ask as to whether a technique is controversial or not. But would you describe any of the techniques that you use as controversial? And what's the current status of some of those?
Yeah, sure. So all of the strategies we use are court tested, IRS approved. I'm not putting anything on a tax return that I don't feel comfortable defending in an audit. That goes the same. I'm not putting anything on a tax return I don't feel comfortable putting on my own tax return. So again, so it really depends on what you define as controversial, but I like to look at it more as what your risk tolerance is. And really, with the design of these plans, I'm trying to educate my clients around their different options. Because especially when you first meet a client, you don't know really what their risk tolerance is. They might say, hey, I want to shoot for the moon. I want the most risky things out there. And so like, we're not doing like Cayman Islands, like crazy things like, no, thank you. I wouldn't feel comfortable putting on my own return. I'm not going to do it. But what we're doing is looking at different risk tolerances and different strategies. So things like oil and gas or the Augusta rule. Some might even find the home office to be risky. Oh, I think that's fun. That's always one of the examples that people give. Well, I've heard that you'll get audited by doing your home office. Well, even if you did, if you qualify for it and you have your paperwork in order, it's completely legitimate. So it really just, you got to make sure that when you're working with a financial professional or tax professional, that they thoroughly explain all the benefits and the risks to every strategy. So then that way you can make an educated decision of whether or not it's something you want to move forward with.
Yeah. One of these areas we've talked about in the past is charitable land conservation easements. What's the current status on those? Are they still a viable option? They now frowned upon. I know they're one of these listed things by the IRS. But how can one tell when it's going too far, when they shouldn't do it, et cetera? Can you talk a little bit about that?
Yeah, definitely. So from 2018 to 2022, even myself, I invested in land conservation easements. But in 2022, legislation passed that limited the benefit of land conservation easements, which, by the way, these have been around since like the 1970s. So they're nothing new, but they got a lot of heat over the years because, of course, like anything good, there are bad players out there that were doing shoddy appraisals and not structuring things properly. So in 2022, they were limited in their benefit, and so they're really in that one syndication sense, we're not they're not a good viable option anymore. There's still a great option if you have your own land that you want to conserve and get that tax benefit, then there's still a great option. And even with the syndications that they put into the law that you have to hold it for at least 3 years, that land for at least 3 years before you can go above what was the 2.5 multiple max if you only held it for 3 years or less than 3 years. Which, by the way, those transactions were actually taken off the listed transaction list, which is kind of like the IRS's dirty dozen list, because they were improperly put on there. And so, again, those transactions are no longer, like, we don't recommend them anymore. We have other ones that we do recommend. And again, if they are, we can't defend them in an audit, then we're not going to put them on the return.
Yeah. Now, how can one know that a technique they're using today, the newest, latest, greatest technique they're using today, isn't going to be a problem in 2 or 3 years when, audit time kind of rolls around? You talk about, their risk tolerance. What risk exactly do they need to be willing to tolerate?
Mm-hmm. Yeah, so they need to go and look at the investment as a whole. And so it just really depends upon how it's structured. So like the ones in the past, the reason why I felt comfortable with them is because you have to look at the appraisers that they're using. They're not doing any sort of crazy multiples, like instead of, like a 1 to 2.5 multiple or 1 to 5 multiple, like that's reasonable. But there were some out there that they were doing 10, 20 multiple, and it was just a big red flag, basically. And so you also need to look at like I said, the appraisers that they're using, that they're doing multiple appraisals, and then they're taking an average of those multiple appraisals. And so when it comes to looking at those in the future, the way that I felt comfortable with it was knowing, hey, this is the tax savings I would receive. And as long as I was able to put that tax savings into something that earned me more than, the time of this recording, about 7%, then I know I'm going to be coming out ahead in terms of any tax that I would owe, plus penalties and interest. You also have to look at as well the court cases that had been finalized and seeing what the outcomes were of those. And there was tons of court cases that were very much in favor of the taxpayer throughout all those years. And so now it's turning a little bit, but there's still actually a lot of support in Congress and other legislation towards the taxpayer.
Yeah. I mean, there's a fair amount of gray area there, it feels like. It's hard for somebody who's not a tax expert, a tax advisor, to sort out exactly when they're being sold an idea that may be going a little too far versus, they don't want to feel like a schmuck that they're just paying too much. That they're just paying too much in taxes. How can they sort out when they're being a schmuck versus when they're taking on too much risk?
Yeah, so it's all about education. So we don't recommend these strategies. We introduce these strategies to our clients. So we're putting it out. We're going and giving them a basic education around them, and then connecting them with vendors that we trust. And so these are even vendors that I invest with, my husband and I invest with. And again, we don't receive any commissions or kickbacks or any strategies we recommend or vendors we recommend. We don't sell any products. So everything is for that education. And then what I always tell my clients is, look, I do not want you investing in these unless you feel 100% comfortable with the risks as well as the benefits. So, what you have to do is do your own research, go out and talk with other vendors as well. Make sure that you're doing any sort of due diligence that you would do for any type of investment.
Now, if somebody wants a boring vanilla investment portfolio, they want some simple set of index funds that their spouse is not going to have any trouble with. If something happens to them, they don't want to invest in oil and gas. They don't want to invest in land conservation easements. They don't want to invest in real estate at all. Is that still somebody that can benefit from coming to you and hiring your services?
Definitely. Yep. Well, especially with that guarantee, I do not tie that guarantee and that minimum tax savings to any of these investment strategies that have tax benefits. And same thing with real estate. And that's because I know that you have to put that money into that investment in order to get that tax benefit. So if I just don't, it doesn't feel right to me to hang my hat and that guarantee on those. So I want to make sure that you have a lot more going on in order to guarantee I have that tax savings for you that don't include those strategies. Because ultimately, if you don't want to do them, that's completely fine. But I at least want you to know your options. And I feel like that's what's very different about Cerebral is that we will look at the riskier options, weigh the pros and the cons, but I won't put them in front of a client if it just doesn't feel right. So there's been other ones that have come across my desk that, if you want me to explain some of them, I'm more than happy to. But so there are other ones that have come across my desk that I'm just like, whew, oh, red flag, red flags, and I don't even
And
put them in front
there's
of
a
my
lot of
clients.
those out there.
There
Like
are.
last year, one that was brought to me was buying tribal tax credits, buying
Yes.
tax credits from a Native American tribe at a discount, and then somehow putting them on your tax return, and just not a lot of history with it. You can't say for sure this won't work, but boy, that sure is sketchy. I don't want to be the first guy.
Yes, exactly. Yes. And we did not, I didn't put those in front of my clients at all because I felt very similar to you. And something was like the conservation easements, those had been around long enough and there was enough, court cases and history behind it for me to feel comfortable with it. But obviously those were brand new. And again, if it quacks like a duck, it walks like a duck, it's probably a duck.
Yeah. Let's talk really briefly about tax evasion. I mean, I've been self employed for the last 15 years. It would not be very difficult at all to cook up my books enough for my business, hide income, etc., to where the likelihood of me ever being caught in an audit would be very, very low. And a lot of people are obviously doing that out there. I mean, one of the best investments our country could make would be in more auditors, frankly. It'd probably lower all of our marginal tax rates that are at least paying taxes honestly. Can you give a sense of how you've run into that? People that are doing things that they think are legit and really aren't, and how that plays into tax strategizing.
Yes. It's definitely in the climate right now that audit rates, they're low. They've been at a historic low, especially too if you have an S corp or a C corp, and so people really do feel like they can get away with things, and it really goes and depends on the amount that you're talking about. I have some clients who have come to me, as new clients, and they write off all of their meals through the business, especially those that are locum, and they could even be they're close nearby, so they're not traveling away or anything like that, and they're writing everything off, like even fancy dinners with their spouse who's employed in the business and things like that, and I'm like, oh, red flags, especially for meals. That's one of the areas that the IRS likes to really look at is meals. And so I tell them, hey, look, I don't feel comfortable putting this on a tax return. We need to curb this a little bit. This is where things are going to be an issue. And some clients have left because they're like, no, like I've always done this. My prior accountant let me do this. Like I'm going to do it. And I'm like, thank you, thank you for considering us, but we're not a good fit. So but if you're unsure about something, that is, like 25, like $25 meal for that you put on there. That's not going to move the needle as much. But you got to make sure that you're doing things properly, especially when there's clear court cases. Like if let's say you're trying to write off your suit. Hey, I buy that suit because I go to clinic, and so I need to wear it for work. But yes, the IRS deems that as streetwear, so you can't deduct that. You can deduct your scrubs. That's not a problem. I'm even comfortable too with if, I have a lot of clients that have to buy brand new sneakers 2-3 times a year just because of how much standing and walking that they're doing in the hospital. So I feel comfortable with that because that, even though that's streetwear, there is a clear business need for that one item.
Yeah. My sense is a fair amount of it is not willful tax evasion. It's people are doing it out of ignorance. Oh, I heard you could deduct that, so I just started deducting it.
Yes.
And I get a sense there's a lot of that going on out there.
Sure. Yes. I mean, the tax code is thousands of pages, and for everybody to know exactly what's going on in that, and what you can and cannot do. That's why you work with experts to help decipher all of that. And even with us, the IRS doesn't provide 100% guidance. So, there are gray areas, and I always again, try to just look at it from an auditor's perspective. And, with me doing that 3-year fellowship in IRS representation, I have a very unique perspective of knowing what would fly and what wouldn't fly in terms of an audit.
Yeah. All right, let's wrap things up a little bit. Let's talk about changes over the last decade or so, right? How the tax industry has changed and maybe how you see it changing in the future, maybe the next decade.
Yeah. Well, definitely the past decade has been a bit of a whirlwind, especially with the 2017 Tax Cuts and Jobs Act that Trump first did and making changes. And then now, obviously, with the One Big Beautiful Bill as well. Things have just, they're always changing. And that's really where, if you have a more complex situation or you have those income changes, working with a tax strategist is crucial, because believe it or not, your situation is going to change as you age, and tax law is going to change depending on who's in the administration. Going forward, though, really AI is taking over. And when it comes to that tax prep, it's really, in the next 10 years, old school compliance work is going to the wayside, that data entry, form checking, et cetera. So that's why Cerebral is really doubling down on that human connection. And we're, using AI to help with that tedious data entry, but then that way our top experts can focus 100% on being our client's financial quarterback. Because not only are we doing taxes, we're working with your other financial professionals, attorneys, et cetera, to make sure everything is going to plan and we're all on the same page. So we really design those sophisticated real-time strategies to protect cash and, supercharge wealth. We can really help you with, from being a passenger who just, pays bills and, become actually highly informed on your business owner as a business owner, and, being able to save tax and really, create a legacy for you and your family.
All right. Thank you so much, Alexis. We've been chatting with Alexis Gallati, the founder and lead tax strategist at Cerebral Tax Advisors. You can get more information about her and the firm at whitecoatinvestor.com/cerebral. Thank you so much for your time today.
Yeah. Thank you so much, Jim. I appreciate it.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.